So my friends, what is the question here? The question is job order cost, right, are more useful for. So this question is from which topic? Job order costing. So it is most useful for controlling the indirect cost of future production, determining inventory valuation using last in first out, estimating the overhead cost included in transfer price, or determining the cost of a specific project, right? So remember, in job costing we have a specific job, unique job, customized job, right? So when you say inventory method and these types of things, they are not in job costing, right? We have these things in other methods, right? So what is the best answer? Because the word they use specific project, which is a job, right? So you need to remember these keywords: specific, you can remember unique, you can remember identifiable, you can say work, right? Or customized. So these types of words, if they are coming, so definitely it means we are talking about which method? Job costing. Clear, everyone? So the question, another question we are doing is, they are saying the two most appropriate factors for budgeting manufacturing overhead expenses would be what? Management judgment and contribution margin, management judgment and production volume, machine hours and production volume, management judgment and sales dollars. So, my friends, this is a very tricky question, but very simple question. And most of you already know it, but the way this question is structured, just to make you feel more confused. Do you remember overhead allocation? Do you remember absorption costing? Do you remember ABC costing? What is absorption costing? We have single driver. We have single driver means the base on which we will absorb the overhead. It can be variable overhead or fixed overhead, depends. But single driver, what that single driver can be? It can be number of units. It can be number of labor hours. It can be number of machine hours, right? Mainly these three in absorption costing. Then we talked about activity-based costing. In activity-based costing, we say we have multiple drivers. Depends on what is the overhead exactly. Accordingly, we will allocate, right? In this question, they are not talking about activity-based costing. As you can see here, they are saying management judgment. So one is management judgment. Definitely, when you select the driver, your judgment is involved, right or not? That whether you want to use number of units or number of labor hours or number of machine hours, whatever, right? So one of the answer is definitely what? Management judgment. It means either the answer is A, B, or D. C is not the answer. Getting? Now, because they're saying the two most appropriate factors for budgeting manufacturing overhead expenses. Okay, so I am trying to budget. This question is combination of budget and costing, budgeting area and costing area. Both are linked. So I am trying to, let's take an example. I am trying to budget one of my manufacturing overhead, which is rent, for example, rent of the factory. I am trying to budget it. That how much should be the rent of the factory? Huh? Or how many supervisors I need? Because supervisor salary is indirect. Because supervisor is not directly involved in production, right? Supervising. So you want to budget these overheads. Also, they didn't mention specifically about it is fixed or variable. Electricity bill, all these things you want to budget. Huh? Now, what is the factor which will come when you are budgeting these expenses? This is the question. Okay. So the most important factor you should remember, and this already we did in absorption costing, if you remember, when we do the reconciliation also, remember between absorption costing and variable costing, we calculate a rate, and that rate is called budgeted overhead rate per unit. Remember, per unit. What is the formula? Budgeted overhead divided by number of units, budgeted. How much you will produce. So you will get a rate. Getting it? So when I say number of units we produce, what I am talking about? I am talking about volume, production volume. And on the other side, definitely management judgment is also involved, right? So I am not sure we discussed anything in which we calculated any rate till now, in which we used contribution margin as a driver, right? Or we used sales dollars as a driver. No, we need activity. It can be number of units, it can be number of machine hours, it can be number of labor hours, right? Okay. So that's why what is the most appropriate factors? Judgment and volume. If in option number C, they would have given you management judgment also, then it would have been the answer. Because he says, and here they say and, maybe they put here or, better. Getting it? So when the question is silent, you will assume they are not talking about activity-based costing. When the question is silent, you will assume they are talking about absorption costing. Clear? Okay, so that's how we landed up to the answer number B. Okay, I will also share with you these answers, official answers. Why A is right, why A is wrong, sorry, why B is right, like that. So you can read through. Okay, especially in theory questions, you should read why other options are wrong. So my friends, another good question we have is review of the firm's internal and external disclosures will likely find what? The company used direct or variable costing for internal reporting and absorption costing for external reporting. Remember, we know this already, right? Absorption costing is used for external reporting and variable costing is used for internal reporting. We know this. And the company is also using accordingly. And the review of firm's internal and external disclosure will likely find what? So basically the
question is not
about absorption and variable costing. So I'm giving you 2 minutes. Again, this is a tricky question. Let's see what you do. And then we will discuss. So my friends, very good question. And it will really help you to revise the topic of absorption costing and variable costing. So they are saying option A, a difference in the treatment of fixed selling and admin cost. If you remember absorption and variable costing, so is there any difference in the treatment of fixed selling and admin cost?
Yeah, there is a difference.
What difference is there?
In variable cost, the selling administrative cost considered as a period cost.
Okay.
But in absorption costing, it's like product cost.
Think again. Think again. Anyone else? Tahir,
Yes, sir.
read this very carefully.
1 minute.
Read this part of the question. Selling and admin cost. Selling and admin cost.
It's no difference in the treatment of fixed selling and administration.
So if you remember in absorption costing, if I take product cost, right? And I take period cost, right?
Yes.
Product cost, direct material, direct labor,
That's,
variable production overhead,
yes.
fixed production overhead. I don't know.
Yeah.
Period cost, variable selling and admin overhead, fixed selling
It's,
and admin overhead.
yeah.
Right or not? I think in variable costing also fixed selling and admin is a period cost, right or not? Huh? Tell me. These two copy paste. On the other side, you can write here. No difference. One difference is there only, and that difference is called this one. Right? So even these three you can copy paste here. But this thing will go on the other side. Correct me if I'm wrong. So see the question again. They're saying the difference in the treatment of fixed selling and admin cost. There is no difference. Because in absorption, selling and admin is also period cost. In variable costing also selling and admin is period cost. So where is the difference? Yes, Tahir. So
Yes, got it.
if they are saying difference in the treatment of fixed manufacturing cost, then it's okay. Because yes, the yellow highlighted is what? Manufacturing,
Fixed.
production cost, overhead, whatever. Not the selling and admin. On selling and admin, methods are on the same page.
Okay.
Right?
Yes.
Only one costing method takes selling and admin as part of the product cost. Can you tell me which method?
Sorry.
Only one costing method takes selling and admin as part of the product cost. Which method? Online people, my voice is clear. Only one method takes selling and admin cost as part of the product cost. Which is that method? Life cycle costing. Which method? Life cycle. If you remember,
Life
cycle costing, everything is product cost. Starting from
Yes.
stream, production, downstream. Remember, after sales service, warranty, everything. Research and development. Everything we take as part of the product cost. Right or not? Anyway, so A is not the answer here. What about C? Can you people see the option number C. They are saying a higher inventoriable unit cost, or you can say product cost. Instead of inventoriable, you can write product cost. A higher product cost reported to management rather than shareholders. So if you see, when I'm reporting to management, it means which method I'm using? Variable costing.
Yes.
You know very well that in variable costing, the unit cost is less because we don't take fixed part. Remember? So this option C is also incorrect. Right or not? What about option D? They're saying contribution margin rather than gross margin in the reports released to shareholders. So to shareholders, I am reporting on which method? Absorption
Variable cost.
costing. In absorption costing, the terminology we use is gross margin or contribution margin. Remember? In absorption costing, we use terminology gross margin. Right? In variable costing, we use contribution margin. Remember, sales minus variable cost is contribution, like that. So this is also wrong because they are saying you are reporting to the shareholders contribution margin. No, because to the shareholders we will report gross margin. You got the story. So what's left? B. Now you people see B is correct. Why? Who will explain me? Why B is correct?
Because the variable costing, we are including variable cost, right? It is closer to sales. Wherein the fixed overheads using the adjusted costing, which will be, I mean, we need to show that productive output, I mean, at the end product cost.
Okay, tell me one thing. Sales move as the number of units sold, they move. Right or not? If I increase or decrease the production, sale will move. Tell me. My revenue will move.
Yeah.
How it will move? I'm saying I am
No.
increasing my production only. Revenue is not moving. Revenue will move when I sell the product. Right or not?
Yes.
If I just keep producing the goods, there is no revenue. Revenue will move when I sell something. Right? Similarly,
Yes.
variable cost. Variable cost is also moving with sales. If sales are more, variable cost is more. Right or not? Huh? So internal income figures, which is variable costing figure, basically, it very closely with the sales, which we call contribution margin. What is contribution margin? That how much one more sale will give you profit, additional profit. So it's based on additional revenue sales. Getting it? But if you remember, in absorption costing, we include something called fixed production overhead. Right? And fixed
Yes.
production overhead is based on production units, not on sales units. Remember this, right? If you want to remember this, fixed production overhead. That's why we call it production, right or not? Is based on production units. Okay, so definitely the income figure will be influenced by the production also and sales also. Definitely. And if some of you revise it, or in future when you will revise this topic, you will remember we did reconciliation. Remember? That what is the income under variable costing? What is the income under absorption costing, and we reconcile it. And when we reconcile it, what we consider, you remember? What is the formula for reconciliation? Can anyone tell me? Increase, decrease in inventory, very nice. Multiply by what? Cost of the product. Why cost of the product? Increase, decrease in inventory, multiply by what? What is the difference between absorption and variable costing? Huh?
Overhead.
It's in front of you, highlighted in yellow color.
Overhead, fixed overhead.
So increase, decrease in inventory, multiply by fixed production overhead rate per unit. That is the difference only. So what we discussed that time, I am repeating again for you. In absorption costing, we can manipulate the profit. In absorption costing, we can manipulate by increasing or decreasing the inventory, closing inventory. Remember, we can play with it. Because if I increase the inventory level, it means fixed overhead I am trying to transfer to next year. Because that is part of the inventory, right? The more you produce, the more amount in the closing stock, the more fixed overhead you can transfer to the next year. So this year profit will be increased automatically. Remember? So when we did essay questions, we did one essay in which the absorption costing profit was more. So I explained you this. And we did another question in which absorption costing profit were less. Right? So if you have not done it, you need to revise it. Clear? But it's a good revision for you now. Which method can manipulate the profit? Absorption costing. Variable costing, you cannot manipulate the profit. Why? Because whatever cost is incurred has to be charged in the same year. You cannot transfer to the next year. Huh? By manipulating the closing stock, you cannot manipulate the profit. Why? Because all the variable cost, whatever you are incurring, that is in the product, right? Huh? And fixed cost, you keep aside. You say, Kali, whatever fixed cost will come, you will charge in full. In full. No transfer to the next year. This is in variable costing. Anyways, so my friends, A, C, and D, they are very clearly not the answers. Even if you don't understand B, you should still select B. Because you can easily eliminate A, C, and D. Right or not? This is called elimination technique. Okay. So this was a very good question and a good revision. So my friends, question number 6. Another good theory question about absorption costing and variable costing. They are saying which of the following correctly shows the treatment of factory insurance, direct labor, and finished goods, shipping costs under absorption costing and variable costing. Okay, so see, factory insurance, direct labor, finished goods, shipping cost. So you need to first make quickly in your notebook that what is factory insurance, under which heading it falls. Because you know very well from previous question I wrote for you also that which item is period cost and which item is product cost. So first of all, you need to quickly write that these three items are what exactly. So one is factory insurance, right? Another is direct labor. Direct labor is very clear for you. And then shipping cost. Okay. So you need to identify what is this cost basically. Is it a material? Is it labor? Is it variable production overhead? Is it variable selling overhead? Is it fixed production overhead or is it fixed selling overhead? And then you can easily give the answer. So I'm giving you 2 minutes for this. Try and tell me the answer. So my friends, the first thing you need to identify what is factory insurance. Remember what is factory insurance? Insurance, fixed cost, right? Fixed overhead. And insurance is relating to factory. Means this is fixed production overhead. You got the story. If insurance is relating to admin building, it will be fixed admin overhead. But right now it is fixed production overhead. What about direct labor? It is direct labor. Direct labor is direct labor. It is one classification of cost, right? What about the shipping cost? Shipping means what? Selling. Selling cost, right? And shipping will only happen when you will sell. So this is variable selling overhead. Right or not? Huh? So now you tell me in absorption costing and in variable costing what happens. So in absorption costing, what happens with the fixed production overhead? It is a product cost, right? What about labor? It is also product cost. What about the third one? Selling, right? Selling. Period.
Period cost.
Right or not, everyone? What about variable costing? In variable costing,
Factory insurance and direct labor product cost.
period cost, right? What about labor? Product cost. What about selling? Period cost. So now you
Period
can
cost.
easily find the correct option. D is the answer, right? Option number D is the answer. The question is, if a manufacturing company uses variable costing to cost inventories, which of the following costs are considered inventoriable cost? Means product cost. Very simple question. You can quickly answer this question. So my friends, what is the answer?
A.
A is the answer. Very nice. Okay. So only raw material, labor, direct labor, and variable manufacturing overhead is the answer, right? Very simple question. So my friends, costs are allocated to cost objects in many ways and for many reasons. Which one of the following is a purpose of cost allocation? I'm giving you 1 minute for this. Try this and tell me the answers. My friends, very interesting question, and almost all of you mentioned many answers, and all of them are incorrect, unfortunately. Okay, so let me show you what is the answer. This is the answer, which none of you said. Now I'm giving you 1 minute again. Read this answer very carefully, and then let me know if you understood it or not. So my friends, why A is not the answer? Did anyone say A? Huh? You said A. So see, they are saying which of the following is the purpose of cost allocation. So how A can be the answer? Because in A they are talking about evaluating revenue center. So revenue center is only concerned with revenue, right? Remember? So purpose of cost allocation is not there. So A is not the answer. Very simple. Why C is not the answer? They're saying budgeting cash and controlling expenditures. Again, in that one, we are not allocating any cost exactly. Because when you talk about cash budgeting, if you remember, we just see what cash going out, what cash coming in. We are not talking about any allocations, right? So that is not involved in the budgeting of cash. Clear? So that's why C is not the answer. What about D? They say it aiding in variable costing for internal reporting purposes. So if you remember, the allocation normally we do for the fixed overhead, remember? In variable costing, we have direct material, direct labor, and variable overheads, right? So the purpose of cost allocation is not there exactly. Because like they are saying you, it looks at variable cost. Since the variable costs are these costs, these are not need to be allocated, right? Although here they are not capturing the variable overhead, because variable overhead we allocate, right or not? In this answer, they are not mentioning about variable overhead, right? So you can argue with me that no, sir, in variable costing also we have allocation, but the allocation is for what? Variable overheads, right? So now if I ask you people, compare B and D, because in exam this will happen. Two options will fight. So you need to select the best option. So whether you will select B or whether you will select D. You understand? So what is B? They say measure income and asset for external reporting. Because in external reporting, we have two allocations, you can see. We have fixed allocation also, fixed overhead allocation, and variable overhead allocation also, right? But if you select option number D, you have only one allocation, variable allocation. So which is the best answer here? B. You understand? So this is what you need to learn when you are answering theory type MCQs. Okay? So any confusion? I hope it's okay now. So question number 12, what it says is saying, remember exam technique, first read the requirement. So what is the requirement? They are saying you in which one of the following independent situations would reported net income for the first year be the same, regardless of which overhead allocation method is selected. Very interesting question. Try it. I am giving you 1 minute and then we will discuss. So my friends, very simple question. They are saying you in which one of the following situations, independent situations, would reported net income for the first year will be same. Whichever method you use, it will be same, regardless of whatever allocation method you use. So we need an answer in which all the overhead we charge in the same year. There should be no chance of transferring any overhead to the next year. But we transfer it in some methods like absorption costing, for example, right? So they are saying young company is beginning operation. So when they say beginning operation, it means opening stock is zero. Opening stock is zero. So we need closing stock also zero. If closing stock is also zero, it means whatever was produced is sold. So all the cost has to be charged in the current year. There is no way you can transfer any overhead to the next year. Which option is telling you closing stock zero? Option number C. If your closing stock is 0, all the methods, whatever allocation method you use, cannot manipulate the profitability, right? Because all the overhead has to be charged in the current year, right? But if there is some closing stock, you have an opportunity to transfer some overhead to the next year in absorption costing. Clear? So that's why what is the answer? C is the answer, which is all ending inventory balances are 0. So what is the question now, my friends? The question is, the term gross margin refer to excess of sales over what? So they are asking the formula of gross margin. So my friends, the answer is C. What is gross margin? It is sales minus cost of sales, right or not? So those people who are saying A, I am not sure why you are saying A, because you know very well in cost of sale we include fixed manufacturing overhead. So why A can be the answer? In cost of sale, we include fixed manufacturing cost, right or not? So if you say A, you are saying cost of sale exclude the fixed manufacturing cost. Then it will be variable costing. Then it's not gross margin, it will become contribution margin.
So the conclusion is that they added indirect word.
So what? Indirect means overhead.
Because of the like direct expense.
Yes. So if this thing will happen in exam, then who will save you? Huh? Indirect means overhead. So fixed manufacturing overhead are part of the cost of sales. So what is the answer? C is the answer, my friends.
So if there would be a contribution margin, that you would be the answer.
Then they will not say cost of sale. They will say something like variable cost of sale. And they will not say gross margin. They will say contribution margin. Right, everyone? So what is the answer here? C is the answer. Do this one. So they are saying you the cost associated with abnormal spoilage. The cost associated with abnormal spoilage ordinarily would be charged to what? So remember abnormal loss we studied in process costing. I told you we cannot charge it to the customer because that is our inefficiency. So we should charge to the income statement, right? Separately you should show. You should not include with other items to hide it. If you do so, then it will not be evident, right, that there was abnormal loss, and you will not do anything about it. So if there is abnormal loss, we need to make it evident in the income statement that we had abnormal loss, so someone can do something about it next time, right or not? So that's why we cannot include it in the manufacturing overhead or material variance or inventory account. We need to show it separately in a special account. So what is the answer? C is the answer. An accounting system that collects financial and operating data on the basis of underlying nature and extent of the cost drivers is. Don't tell the answer. Take 1 minute, let others think also. Yes, what is the answer? Huh? A? Some people are saying A, some people are saying C. Some people are saying B. Okay. So my friends, tell me one thing. What is absorption costing? I told you. It is a traditional method used for external reporting purpose. The concept is single driver. It can be number of units, number of labor hours, number of machines, single driver. Traditional concept. When companies used to do mass production, when companies used to make single product. So if you are making single product, then no problem. Whichever base you use. Right or not? But if you are making multiple products, you cannot use a single base. Why? Because one product will use more labor hours, another product will use less labor hours. So if you take labor hours as a base, so the product which is using more labor hours will get more overhead. The product which is using less labor hours will get less overhead. Makes sense, right? But that overhead is not only pertaining to labor. That overhead can have other items also, right? We need to break down. Maybe quality control cost, material movement cost, setup cost, right or not? So a product which is using more labor hours, maybe they have less quality control. So why I am charging them more quality control also? You understand? So that's why we study a concept called activity-based costing. So in activity-based costing, we break down the overhead. That how much overhead pertaining to labor, how much overhead pertaining to quality, so that the allocation is accurate, more fair. Clear? So the answer here is B. What is the answer? Because they are saying on the basis of underlying nature and extent of the cost driver. That what is the underlying nature of the cost driver? Is it quality control? Is it material movement? Is it labor? We need to find out. So that is done only by which method? Activity-based costing. Clear, everyone? Okay. So by the way, variable costing and direct costing, it's the same thing. So if you are in exam and you are smart, you can easily cancel it. Why? Because same method they cannot give in two options. Variable costing and direct costing is same thing. How that can be the answer? Because there are two separate options. Clear? And there is no costing method called cycle time costing we studied, right? Or not? By the way, what is cycle time? There is nothing called cycle time costing, but there is a terminology called cycle time. What is cycle time? Cycle time is the amount of time that the customer wait for their order after they place the order. So once you place an order on mobile application, right, for food, they give you time, right? 30 minutes it will be delivered. That is called cycle time. Okay, but there is nothing called cycle time costing. Did we discuss any method like this? Then there is none like this. Okay. So my friends, okay, do this one please. In process costing, the cost of abnormal loss should be what? Very simple question. Can we ignore the abnormal loss? So B cannot be the answer. Shall we separate it between some finished goods and closing work in progress? Shall we include it in the finished goods? No, right. So what's remaining?
No.
It should be
Treat as a
treated
loss in the period cost.
the period in which it is incurred. So the answer is A. Clear, everyone? The method for, remember service allocation? We did different methods like, direct method, step down method, reciprocal method. We studied these three main methods. Huh? So remember we did some question S1, S2, P1, P2 and the relationships like that we studied. Right? So what is direct method? When you directly allocate the cost from service department to production department. What is step down method? Where you have from service to production and service to service also. But if service department 1 is giving something to service department 2, service 2 cannot come back. That's called step down. One time only. No reversal. But if service department 2 is giving back also something to service department 1, that is reciprocal. Right? So what is the answer here? B is the answer because they are saying best recognize the mutual service department. So which method we need to use? Reciprocal. And in reciprocal, if you remember, we did some algebra. Okay. So please recap those workings as soon as possible. By the way, reciprocal method is also called algebraic method, algebraic distribution method, another name. Okay, do this one, please. My friends, you need to learn one exam technique here. Exam technique, first read the requirement. What is the requirement? They say of the following, the most appropriate cost driver for assigning material handling cost to the product will be what? So you need to identify what should be the cost driver for material handling cost. And no need to read from the top anymore. If you are smart enough, you can easily answer the question. Because for on the top, they are just giving you an idea about the business. But the main question is, what is the cost driver of material handling cost? So do you think the driver can be number of vendors? Number of vendor means number of suppliers, right? So you need to look for something relating to handling materials. So what is the answer? Labor should be the answer, labor hours. What about number of unit produced? No, right? So what should be the answer? What is the best answer? B is the answer. Number of parts. So the more parts will be used, the more they have to be handled or not. If a product has more parts, so more handling is required or not. So what is the answer? B is the answer. Getting the story, everyone? B is because this is the best among the other three. Okay, do this one, please. So they are saying you, a manufacturing company properly classifies and accounts for one product as a byproduct rather than as a main product. Why? B. So remember we did joint and byproducts. So in joint product, we have some process. We process one material, then we reach a point when the product is split into some products. That point is called split off point. Now some products will come, they will have different type of selling prices. Huh? So one product will be main product, maybe 2-3 main products, and one product will be byproduct. That is not my intention. Like for example, when you cut the wood to make a table, your intention is to make a table, or your intention is to get those small wooden pieces which will be remaining? Table. That is main product. So the small wooden pieces are byproducts. Right or not? Which you may sell in scrap market for a very low amount. So what is the answer? Say low sales value when compared to main product. That is the answer. Getting the story, my friends? So C is the answer. 34C. So huh? D, this one? Last one?
B can never be done.
Yeah, because again, how it can be developed into a main product? Huh? Give me any example.
My product can never be developed. Never.
Huh?
Never be developed.
Can never be developed into a main product by this company or any other company. Yes. Okay. What is main product?
Which has high value.
High value main product, right? So something which is remaining from the process, some minor item is called byproduct. Like when you cutting the wood, you will have some dust also. That is sawmill. Huh? Right? So that dust is also used in scrap. You can sell it. But that dust, can you make a table from that dust? Table, the main product. So that's, if I want to make furniture, I will use as much as possible from the material to make my product. So whatever is remaining is very less amount, right or not? From that, you cannot make the main product itself. Think about it. You understand? Okay. And even if you want to make, it will take a lot of effort and time. Maybe some extra effort which is not justified. You understand? Like all those small wooden pieces, you say, okay, we will combine them together and we will make a table out of it. So that is not justified, that headache, because small wooden pieces you will combine together to make a big table. Okay, you can make it, but there is who will buy it? Because we need table which is complete, not from some pieces together. Maybe you can keep this in museum. Huh? Or maybe it can be sold at a much higher price as well. You never know. People will say, very nice. 1,000 wooden pieces combined together to make one table. Huh? So my friends, remember I told you that in the options, you need to look for the best option. So do you think option number B will make a better option for you in exam than option number C? When you already know that the definition of byproduct is what? It has a low sales value as compared to main product. So why you want to take risk and select option B? Huh? You understand the point? So my friends, what is the next question? Do this, please. So now they are saying, what is the preferable method for accounting for byproduct if you sell it? Okay, see, they say the byproduct relative sales value is quite low. Getting it? So it means we should not record any revenue. I mean, there is a possibility you can record revenue, separate revenue from byproducts. But in this question, they say it's very low, immaterial. So you should not select option number C. But if they say it's very high value from the byproduct, the sales is coming very high, then C can be the answer also. You understand? But here it cannot be the answer. Why? Because there is a very low sales value. So when there is very low sales value, what is the best method to do is option A. What is option A? You will reduce the other cost, which is allocated to the joint products. Net off. This is called net off method or something you can say. Right? Clear everyone? So the answer is A.